Welcome back to CryptoBanter.com, and this is a segment of the show that I've really been looking forward to for a long time. This is a segment of the show where I bring my friend Charles Hoskinson on. He's the founder of Cardano and a friend, and he's going to be talking to us about his trends or what his expectations are for crypto 2021. I also have a lot of questions for him. He came out quite vocally in when the Ripple XRP SEC case happened. So much to talk about. Charles, welcome back to Crypto Banter.
Hey, Rand, it's a pleasure to be here, and Happy New Year.
Happy New Year to you too, my friend. Charles, you came out, you were one of the first guys to come out when XRP or when the SEC took on XRP. You're one of the first guys to come out vocally and make a point. What are your thoughts now that the dust has settled? What are your thoughts about, what the SEC did, and then, of course, how XRP or how Ripple has responded?
Well, I made 3 videos about it. I made the first video right when I heard that they said it's a security, and I said, oh, wow, that's weird. And then I read the Wells notice, and you're still there, right?
I'm right here. Yes, I'm here.
Oh, okay. I'm sorry. I lost you on the screen. Just making sure I was talking to the audience. So anyway, I read the Wells notice response from XRP, and then finally I read the SEC summary. So what happens in a securities enforcement case is if the SEC goes after you, they don't just go after you. They talk to you first, almost always. And there's usually a pre-enforcement negotiation where both parties kind of talk around. There's discovery of documents and these types of things. And at the very end of it, if they actually want to make it formal, they send you what's called a Wells notice. And basically that's it's saying, hey, we think you're a security, convince us you're not. You reply to it. And about 4 out of 5 times, they reject the reply and then file a lawsuit and go after you. So usually there's a latency there, 2 to 4 weeks, if not longer. So when I saw the Wells notice, I said, okay, well, they're not going to file a lawsuit until January. And then like literally the day after they dropped the lawsuit in the Southern District of Manhattan. So I read that, what they said was 71 pages long. It was a lot of reading. And it really surprised me that they didn't make it what's called a 10b-5 case. And that's what's called, that's securities fraud. Because basically, if you read through it, what really pissed the Securities Exchange Commission off was that Brad and Chris sold $600 million worth of XRP over a long period of time and gave it to themselves. And it was like one of those things like, well, the only way we can make this a crime or the only way we can make this a civil issue is by saying XRP is a security. So we got to do that to go after the principles, but everything there, breaking the corporate veil, requesting a jury trial, it's very clear that this is a personal case. This is not a procedural thing where you kind of screwed up on paperwork and that they're trying to prove a point. This is a situation where it was clear they were trying a negotiation, and it's clear there's bad blood in both organizations. Statute of limitations don't apply. They entered a tolling agreement in 2019, and the SEC is taking a position that XRP's always been a security since 2012 on. So it's definitely a bellwether case. Now, what I said in the 3 videos is that at this juncture, XRP is probably not a security because it meets that sufficiently decentralized viewpoint the SEC has. But I also said I understand why the SEC is doing what it is doing, because they just don't like it when founders of projects just dump hundreds of millions of dollars of their token in a slightly not so transparent way while going on TV and saying prospects look good, you should buy. And they point out in numerous cases of what they feel is market manipulation. What's unfortunate is that this is an example of an ununified response in the U.S. Treasury Department. So you have some branches like FinCEN, for example, say, oh, we're okay, it's a currency, we'll just regulate them, they'll apply for money transmitter license and so forth. And then the other thing is that what they really should have done is gone over to the CFTC and said, well, we don't have a Ripple problem, we have a Chris and Brad problem. Let's go ahead and say it's a commodity and then charge them with market manipulation like they did Mark Rich or any of these other guys, and just gone after the principles of the company, but not hurt the retail investors of XRP. Since they've taken this action, Coinbase is delisting, OKCoin is delisting, Bitstamp is delisting, and I think the market has collapsed more than 60%. This is a predictable event, and actually the former commissioner of the SEC, Joseph Grunfest, who's heavily involved in our space now, wrote a letter to the current commissioner of the SEC and say, you shouldn't do this, because all you're really going to do is hurt the retail investors and damage an already existing product. So it's a difficult situation, and what's frustrating is there's no resolution. It's going to go on for a long time, 24 months. They might lose the initial, then it'll go to appeals in the Second Circuit and work its way through. It could go all the way up to Supreme Court, redefine the Howey test. But it's a backtracking on prior statements that the SEC made about sufficient decentralization, and it's just not good for the industry as a whole. And what's really sad is a lot of these other coins, like Vitalik and others, they say, oh, XRP is a shit coin, hallelujah, this is great. At the end of the day, you're just hurting retail investors. Whether you like Chris and Brad, you're hurting these guys.
I'm going to take the contrarian view here. I'm not for US regulatory bodies. I think that the US is over-regulated, and I think that they're over-enforced, and I think that the whole approach specifically may cripple the US and destroy their leadership in technology. So I'm not a big fan of what they did. And of course, I want to support all my friends in crypto and say, if the SEC goes after any crypto company, we all have to go rah, rah, rah and fight against them. The problem is that I have a fundamental issue here. I don't believe in centralized companies that have shareholders that also have tokens and then have the majority of the tokens and sell the tokens to fund the activities of the centralized company and then pay dividends to shareholders at one point from the proceeds of effectively dumping tokens.
Exactly. And that is what pissed off the SEC. Rightfully so. They said, look, you guys have Andreessen Horowitz as an equity investor. You could easily Silicon Valley raise hundreds of millions of dollars to capitalize your company. You instead sold XRP to capitalize the company, which in itself is not necessarily a bad deal, especially if you're spending it to grow the ecosystem. But they didn't do that. They did distributions to the principals of the company.
Distributions to the principals, well, the market makers propped up the price, they hyped up the price, and the principals dumped their own tokens, which is fine. Like they say, Jeff Bezos is allowed to sell his stock if he wants to. I just don't think that you can compare a token which is issued without any rights and sold to the unsuspecting investor to fund the operations of a company, a centralized company. Look, without wasting too much more time here, I think what you're saying is that the outcome that you expect here is very similar to what I'm saying, where I expect that the SEC will probably say, look, right now it's not a security. It's decentralized. We're beyond it.
But they didn't say that. They took an unprecedented step where they said XRP in its current form today is a security. With EOS or any of these other regulatory actions, they had an escape valve. So they said, well, you sold this ERC20 token on Ethereum. We're going to go after that. We're going to fine you for that, but we're not going to make any statement on EOS as of today. Or Tezos is another example of that, where there was something that happened, let's settle, and then we're done. But Tezos of today is a different thing entirely. What the SEC is saying here is Ripple was and still is a security today, which is why Coinbase, for example, is delisting it. They wouldn't do that if it wasn't a security.
Everybody. Charles, do you see any case for actually buying XRP now? And I'm not asking you to speculate on price. I mean, I want to stay away from those kind of...
No, and I've never seen a case for it because they've had so many opportunities to dominate and really innovate, and they passed on it. For example, the consensus system is closed. It's an invitation-only club. There's no smart contract functionality. They had a project called Codius. They could have owned all of DeFi. They came up with that before Ethereum was around. And that could have easily been in. There were a lot of people who tried to use XRP for token issuance in DeFi, and it was discouraged in that ecosystem. So you have all these XRP people that are just absolutely convinced it's the best technology in the world and that XRP is going to eat all the banks, but it does nothing for central banks. It's not a central bank settlement system. It hasn't really replaced SWIFT. There's no real use and utility in the system, and it doesn't do much for me in the DeFi space. Despite the fact that they've known how to do it, people like Stephen Thomas and others came up with great ways to add functionality to the system. And also, I can't participate. If I buy XRP, there's nothing I can really do with the consensus system. You buy ADA, you buy EOS, you buy Tezos, you buy F2, you can participate in the consensus system. You can participate, in the case of Tezos and Cardano, the governance of the system. You can't as an XRP holder. So I don't feel that that's a good or solid ecosystem. The other thing is there was no reason for the Ripple company to be in charge of the distribution of the token. If you have a smart contract platform, you could have the blockchain itself emit the money. But that wasn't the case. Instead, they just played judge, jury, and executioner and decided, well, we're going to give some here below market rate and some here below this, and then we'll sell some here and so forth. It's like, guys, this is you're doing cryptocurrency wrong. Now, every time I say this, the XRP army brutally attacks me. So they like me because I said it wasn't a security, but tomorrow they're going to hate me because I'm being critical of it. But what's amazing to me, I just tell people, think for yourself. You need to be decentralized. With Cardano, we have 1,200 stake pool operators. They've run the network. With Ethereum, they have thousands of people participating in mining. Same for Bitcoin. Okay, it's a decentralized network. You don't have to ask permission from anybody to use it. There's no central entity that encourages or discourages types of business. If somebody, for example, today wants to run Wikipedia 2.0 on Cardano, they don't call anybody. They just go and start building, and they do that. Whereas Ripple was always in this weird hybrid land of you kind of have a gatekeeper, you kind of don't have a gatekeeper, and we're going to say there's no gatekeeper because, well, we don't want to be a security. Meanwhile, price is great, you should buy. Oh, and by the way, we're always selling. And then we're giving the proceeds to ourselves. It's just extremely distasteful. And it's why XRP has been loathed by many people in the space. That said, there are hundreds of thousands, if not millions, of holders of Ripple, and they deserve better. And they shouldn't be hurt because of the actions of some of the founders. And I know why the SEC is doing its standard playbook. They want to provoke a class action lawsuit against the Ripple company for right of rescission. Because if it's security, you can ask for your money back. So they're trying to bleed out the markets to a point that law firms start doing a class action. It's a very standard playbook, and it's going to be quite damaging next year to them.
Charles, I love having you on the show, not only because I think you have an amazing way of taking very complicated things and making them very simple, but also because every time you come on the show, the chat goes absolutely crazy. We've got Pseudo Crypto. Thanks, Charles. ADA is such a gift. You have this unbelievable community that follow you around. Guys, if you are watching this and you want this interview to go out to more people, hit the like button, hit the subscribe button, because that's how YouTube decides who they distribute the content to and how much they distribute the content to. People here are comparing Charles to ADA, the smart guy. He's like Steve Jobs. I think I kind of agree with him from my interactions with you. Charles, this is a show where I don't really want to talk about Cardano. We had a show about Cardano 2 weeks ago. It was amazing. It's one of our most viewed shows. We've had over 40,000 views on the various mediums. Really one of the best shows that we've had. But I want to talk to you more about the crypto space. And I want to start off with a very basic thing and saying to you, when Bitcoin started as a peer-to-peer electronic cash system. We now know that it's not exactly cash, or it's not exactly cash in its current form. And we created this narrative that Bitcoin was a store of value, a digital gold. And it seems that now Bitcoin is going way beyond this narrative of a digital gold, because people are realizing that it's programmable, that it's digital, etc. Let's try and understand, where are we in the market cycle of Bitcoin? Where does this thing go? What does Bitcoin become? When you look at it now, and you followed it right from the beginning, I think in the beginning you probably thought it was a money or a store of value. Where do you see Bitcoin going now?
Well, Bitcoin is like the socially acceptable way of getting involved in the cryptocurrency space. And you often see this when you see the evolution of technology. So in the beginning, Bitcoin was like the radical thing. And if you were a Bitcoin guy, it's like, wow, you're out there, you're a crypto anarchist and so forth. Now, Bitcoin is like the old, safe, ossified thing where we know it doesn't change very much. The regulators understand it. And it's very easy for people to buy and participate in Bitcoin. And it's easy to tax it. It's easy to understand it. You can de-anonymize it in ways that law enforcement is comfortable with. So it's no coincidence that we've seen a litany of institutional investors now entering into Bitcoin. Now, Bitcoin serves kind of two roles in our ecosystem. One is it's a ubiquitous store of value. So it's kind of the rising tides or falling tides. None of the alts go anywhere unless Bitcoin goes somewhere. And if Bitcoin goes down, they go down. If Bitcoin goes up, they go up. So that's one dimension of it. The other dimension is it's the gateway drug into our ecosystem. The minute you hold Bitcoin, then you can wrap it and send it to other networks. You can go and trade it on alt exchanges and get into many other things. And also, it creates curiosity. So once you're in it, you're like, well, what's better? What's next? And so forth. So it's going to maintain, in my view, that role for at least the next 3 to 5 years. Now, the problem Bitcoin has is it has no governance system. So as a consequence, it's super difficult to upgrade Bitcoin to make it competitive against what the third generation cryptocurrencies are bringing to the table. So when we start talking about how do we build a new financial system for the world, and get 1 billion people in and do DeFi and be really useful and do peer-to-peer lending and peer-to-peer insurance and stable coins, Bitcoin doesn't have anything to offer there. It's just a way of leaving the legacy system and entering the crypto system as an entry point. So it's a good gateway, but you can't really use that platform effectively to host stuff at the moment. Now,
but
it's no
Charles,
coincidence. Go ahead.
Sorry, so Charles, I think I agree with you on that argument for more advanced users and people who are actually interested in crypto as an asset class. But if I look at the new types of buyers, and I'm going to use Michael Saylor as the kind of buyer, and there's many like him, or they are becoming more and more like him. I don't know if they really want to get into crypto. I'm not sure that they have any interest in smart contracts as they currently stand. I'm not sure. I think they just want to hedge against the US zero interest rates and printing of US dollars. And I think that they're saying, look, this is gold.
There's too much money in the world. There's too much money now. We've printed too much money. And so imagine if you're like the CEO of the Sovereign Wealth Fund of Norway. You got $1.5 trillion, and then the country tells you can't invest in oil or carbon anymore. And they say it has to be like this type of investment or this type of, or let's say you're doing a sovereign wealth fund for an Islamic country. You can only invest in, investments that are approved by Islamic finance. So when you have too much money and you can't deploy your capital everywhere, you still are expected to get 6 to 9% return every year. So you see this asset class that just consistently goes up over a 10-year period, and it goes down, but it always goes back up. So as an asset manager, you say, if I can lawfully invest in that collection of assets, that's fine. And then once you're in, you start building sophistication around that, because you have a fiduciary responsibility as a fund manager to build sophistication around your investment portfolio. So you say, okay, where's the macro trends of that industry going to go in the next 3 to 5 years? So there are two. One is a push towards a movement of value from proof of work coins to proof of stake coins. And the second is a push towards real use and utility. So instead of just being a store of value where we can park money, these things are actually starting to serve real utility, especially in the developing world. So if you're a fund manager, you're saying, well, I have to put money in here. Do I just keep it in one asset, or do I do what I always do with my fund, which is build a portfolio? But then when you build a portfolio, you say, well, what goes in that portfolio? So then you have to understand the macro, you have to understand the dynamics of the industry, and you have to also have ratings and indexes. So you have Bitwise and you have Weiss and these things. And over the last 3 years in particular, we've really seen an organic growth in all of those things. So it doesn't matter if Bill, the fund manager, gives a shit about the principles in this ecosystem. He has a very real problem is he has too much money. He's expected to have a return. The set of things he can invest in are shrinking or becoming duds. I mean, like how much money you're making on bond yields or treasury bills or these things anymore. They're just pointless. You're talking about negative interest rates. So you have to deploy capital somewhere else. And then you have this new asset class that keeps growing, and it seems to be getting institutional acceptance. Your neighbors are investing in it. And your investors are saying, how come I don't get returns like that? Your LPs are pushing you. So you're willing to pull the trigger and push in there. And then that requires you to build sophistication over time in that industry.
Charles, I think if we look back at 2020 was a bad year and a great year on many accounts. I think for crypto holders, it probably didn't start off like the best year in the world, but it's finishing off on a real high. Not only because I think we've made such big strides in positioning Bitcoin as a store of value and bringing Bitcoin to the world, and thereby bringing, of course, the whole asset class to the world, but also because it seems like we've launched DeFi. It seems like DeFi is really a thing now. Let's look forward. You're nodding your head. I'm keen to understand why you're nodding your head.
I don't think DeFi is a thing at all. I mean, right now it's a thing, and it's a thing in that we're starting to talk about it, learn how to build these protocols, but it has no users. DeFi is not about a kid living in his mom's basement in New York trading one cryptocurrency for another, yield farming. The whole point of DeFi is that there are billions of people who live in economies where they do not have banking services. They do not have access to the global economy. And DeFi is a low-cost way of getting them into a global economy. That hasn't happened yet. It's just like Bitcoin in 2013. It went up to $1,000 at the end of the year, but Bitcoin had no real use or utility at that point. It was still a small asset class. People were just starting to take it seriously. And a lot of well-intended people, especially VCs, said, this thing is going to get big one day. But it would be crazy to have called Bitcoin big in 2013. Now it's big because it has real utility. It's a safe place to park value, and it's basically another version of gold. As an asset manager, you kind of wrap your head around that, understand that, and it's reached that prominence. It's not going away. Governments are even taking positions in it. But DeFi is like 2013. It's going to take another 5 years to 10 years to see real growth and adoption and use and utility come in. And when that happens, you're going to have hundreds of millions, if not billions of users. And these applications will move trillions of dollars of wealth every single year. The problem is none of the existing DeFi applications are proven to be able to scale, to be secure, or actually have the right teams behind them quite yet. Just like 2013, we didn't have an altcoin that really made a lot of sense. I mean, we had variants of Bitcoin, but who cares? And then Ethereum came out, and it was the first time ever people said, hey, there's something here that's unique and different from what we've seen before. Well, similarly, DeFi has to have its Ethereum moment. It hasn't had that moment yet. It's more like the fertile Cambrian expansion, where we have all these different things and we have unrealistic valuations. You have crazy things like anonymous teams behind them and other things. I saw all of that back in 2011, 2012 with the altcoin surge. It makes no sense. You need professionalization, you need regulatory clarity, and you need scale to emerge. And that's not going to happen for a while. It's going to take a few years to work its way through.
All right, so let's look at what we can expect in 2020, which is, again, I think the main reason why I wanted to speak to you here. We've got 3 days left of the trading year in 2020. Let's look at 2021. If we speak again at the end of 2021, or if we look at the themes that you think will develop, where are you putting your chips in 2021?
Well, that's really interesting. So first off, the United States still has profound influence over the markets in general. I mean, look what they did to Ripple just from one regulatory act. So the first question is, what will happen in the Georgia Senate race? So if that goes Republican, it's very unlikely that Biden is going to be able to get a lot of his appointees in quickly. So that means the interim SEC chair and the Treasury people are going to stick around. And they're actually kind of pro-crypto, these new people that are there. So there's a nice 6-month window, if not longer, where policy can be made that potentially could be very beneficial to the industry. The other thing is that we're going to be hit by a COVID tsunami of, we keep printing money to prop everything up. At some point, you have to pay the bill. So we're going to see an economic collapse, if not a depression, then certainly
in 2021. In 2021.
I think so, yeah, because everything we have in the economy is just like we kept printing money and kept injecting. You can't do that. So at some point, they're going to say, hey, we're not going to print anymore. There's no more stimulus. We can't afford this, or else we're going to debase the currency. And then you live the consequences of a year of lockdowns. You can't go to New York and get rid of half of the restaurants and destroy the entire service industry and say, oh, that has no economic consequence. I'm sorry, it's going to be devastating. So, and there's this demand for a welfare net, and that will continue to deplete the government and so forth. So it's not going to be good. It's going to be blood in the streets. And so you're going to see the economy kind of go down. You're going to see this regulatory uncertainty that exists for a while. And usually there you have a fleeing to safe assets, which, for example, earlier this year when COVID first came out, everybody started selling like crazy. They even sold Novavax, for God's sakes. They sold everything, went to cash because it's a cash is safe. They even sold Bitcoin, and Bitcoin collapsed and the markets collapsed. So the question is, will crypto be the safe harbor asset in 2021 and people actually buy instead of sell it if they see economic downturn? We don't know. Now, if it is, we could see $50,000, $100,000 Bitcoin just from capital inflows as a safe harbor. And then there's rising tides for the entire industry. If it's not, then the price we have right now is probably a peak, and we could see a depreciation fairly quickly. So that's on the US side. And then there's also the European side. There's also what is China going to do? And they're innovating, but in a very Chinese way. It's very closed, very insular, very top-down control. So for example, the PPOC is building a stable coin, okay. And that does create synergies where other nations want to create stable coins. We've noticed a big uptick in central banks contacting us saying, hey, we're thinking about a stable coin. What can you say about it? And usually when we talk to them, they say, hey, we saw what China's doing. It's really interesting. What can we do there? So there's going to be a lot of synergies that occur there as a consequence of what China does. But I don't think China anymore controls the crypto markets because they got too aggressive with cracking down So it wasn't like it was in 2015 or 2016, where China could actually lead the market or crush the market.
They
so
Go ahead. They crashed innovation back then. I think they crashed innovation back then. I think they clamped down too soon. And, there was a big flourishing community in China, and they were doing exceptionally well. I think I get the picture that you're painting around the macro environment. Specifically, where I want to get into the portion of Charles's brain where he tells me what he's looking at in the crypto market. Like, what's going to be built? What can we expect to see? I think we had oracles, we had derivatives, we had margin. What are we like? If we look at 2021, what are we going to see built? What are we going to see emerging as the new crypto themes? And I think specifically why I'm looking at that is I want the listeners and the viewers of our show to be able to go and look at potentially investing in certain themes. I'm not going to put you on the spot for specific tokens yet, but I really kind of want to understand the themes that you'd invest in, given your thesis for this big environment.
So there's some certain technology trends. One of the advantages that we have in our company is we're both a research group and we're also an engineering company that builds cryptocurrencies and products and services. So on the research side, we kind of can see the future. We kind of say, okay, well, we know where the world's going in 5 years based on paper volume. So the big thing that I've noticed, certain research trends are things like recursive snarks and just overall evolution and improvement of snark technology. And why this is relevant is it solves one of the biggest problems. It's a partial solution to one of the biggest problems of the cryptocurrency space, which is what happens when the blockchain just gets too big. Well, we want growth and adoption and use and utility, and we go from gigabytes to terabytes to petabytes. But what happens when that occurs? Who gets to actually bootstrap the system? And how do you make sure that you can use the system on a cell phone or a laptop? So recursive snark gives you full node security, but you have a cell phone-like user experience. It's very fast, very quick, regardless of the size of the blockchain. So we've seen a great research agenda. We saw Halo, Halo 2, and now Dan Boneh and his colleagues at Stanford wrote a paper called Halo Infinite. And that's a bellwether that technology is leaving the lab and it's going to work its way into more sophisticated cryptocurrencies. And that's going to help a lot on the scalability side. So there's a lot of people chasing that. And you pick your favorite snark vendor from the Coda project to Zcash and so forth. And we actually do research ourselves in that because it's just such a fascinating topic. But I think that's one major thing that has always been percolating in the lab, but it's starting to work its way, and we may see commercialization of that in 2021.
That's a great one to follow.
Yeah. So second is, the proof of stake stuff is just starting to get really good. I mean, back in the day, it was like, does it work or does it not work? That's where we were at in 2015. And there was a very strong adherents who said it does not work. It's perpetual motion. Proof of stake is a scam. And they wrote all these papers. Usually they come from Blockstream, these types of guys. And they had some valid criticisms and critiques. And there were certainly a lot of issues, long-range attacks, grinding attacks, issues with the clock, being able to bootstrap from Genesis, recovery from 51% attacks. These were not easy problems to solve, whereas proof of work had a very elegant, simple way of solving it, a bit extremely expensive. To synthetically do that without the price is required a lot of research. Well, what we've seen is this Cambrian explosion of papers. So we have Nakamoto proof of stake out of the University of Illinois, Algorand out of MIT, Snow White out of Cornell, obviously our Ouroboros research agenda. So what's happened is the science and foundations have become solidified and validated in the peer review setting. So now it's gotten to a point where you're starting to see economists from Harvard and Stanford write papers on the economics of proof of stake and what works and what doesn't work. You're starting to see a lot of refinement of proof of stake. So the realization of that refinement in 2021 is going to become a big thing. And the key driver there is probably Ethereum. They're the 800-pound gorilla, so they have the biggest say in it. And it's going to actually create lots of open questions about is a plutocratic system sustainable, or do you need to somehow introduce a meritocratic element to it? The regulatory side has a lot to be figured out. The tax side has a lot to be figured out and so forth. But I believe that's going to be the single biggest value transfer in the space next year, where you're going to have a lot of proof of work money go into the proof of stake space, and people are going to take portfolios of it.
I'm not even going to bring in the discussion of the Bitcoin maximalists, but I think I do agree with you. I think we have made some strides in proof of stake. I think a lot of the proof of stake strides are still on paper. They're still in the research format. And I think that that is going to go into 2021. One more trend that you're looking at in 2021, and then I'm going to play a game that I promised our viewers and our listeners that we're going to play with you. But one more trend that you see in the crypto space for 2021. I know you didn't mention snarks. I know you didn't mention proof of stake. One more.
Yeah, so there's also a discussion about decentralized storage. And this has been something we as an industry have been flirting with for a very long time. I remember the MaidSafe days, the Storage days, and so forth. It's been long, and now we have IPFS and these other things. But that's another example of a very real problem, that data has to become an economic agent. It's too expensive to perpetually store things forever on a blockchain. And it makes no sense to perpetually store everything forever on a blockchain. So the question is, what do you keep forever? What do you pay rent? That's a very uncomfortable conversation because you're kind of diverging from Satoshi's vision, but it's a necessary garbage collection feature of a network. And if you don't do it, you're going to see gargantuan blockchains that are just simply too expensive to store, which is the problem is exacerbated that these are replicated systems. So you have a concept of a full node, and every single full node has to have the same data. So you have K full nodes and data, it's K times N. That's just crazy. So we want to move to a distributed system where everybody has a different chunk, kind of like BitTorrent, right? You know, everybody has a different piece of it. Somehow you can reconstruct whatever you want, but no one actor actually has the entire system. There's been a lot of discussion about this. You have projects like Chia. You have things like proof of space-time. You have proof of simple work and permacoin. All these types of projects or ideas that were in the academic world, but now we're actually starting to see people take this idea very seriously, especially smart contract platforms like Ethereum. And we do as well at Cardano, but we didn't have time to put that in the original 5-year agenda. So we're going to try to sneak that into the 2025 Cardano agenda. And, you know, other projects are also looking at this that are sensible. And it's not an easy question at all because you lose availability. And so you go from a guarantee that all data is always there all the time to probabilistic guarantee. Second, if it's an economic agent, you will eventually lose some of your history. It'll get pruned out of the chain. But it's absolutely necessary when you're talking about billion users and high growth. And whoever solves that problem first, I think, has a huge leg up in the smart contract industry.
Yes, I think the blockchain has created a problem of where you actually store data. I know that Arweave, which is a protocol that we are looking at, or we do look at, is talking about that, or is doing making some strides. You've obviously got IPFS, you've got Filecoin, which is, I don't know if they're ready for that kind of storage, but definitely something to talk about. Charles, in the interest of time, we've got, we're moving on to our next segment, which is all about small caps data. But I promised our chat people and our listeners and our viewers that I'd ask you a question. I'd put you on the spot and I'd say to you, if you were to buy 5 tokens, but none of them are allowed to be Cardano, because we know that your heart and soul and everything else is in ADA. And I'm not actually even looking at price here. I'm just looking to see the types of projects that would excite you if you were an investor in the space, if you are an investor in the space, outside of the Bitcoins and the Ethereums. Where would you put your money?
I mean, I only hold 3 tokens, Ergo, Bitcoin, and Cardano. I mean, I just generally don't buy tokens in other projects. People give me tokens, like, you know, I have some Poly because I was a consultant there, for example. And, you know, that's fun, but I don't generally look at these things as investments. You know, I'm here because I have a mission. You know, my goal is to build up enough infrastructure so that we can actually go and give economic identity to billions of people. So whether Ethereum gets there first or Cardano gets there first, you know, I'd like for Cardano because obviously I think it's better technology and I hate Solidity development, but I'd like the infrastructure to mature and evolve to that point, and then let's go and get that done. I don't really look at crypto as an attractive speculative investment, principally because the markets are thin, they're controlled and highly manipulated, and you can't win when that occurs. Also, macro events have huge, huge impact. And things happen that are outside your realm of control. So why would I put money into an industry or market where 90% of the value appreciation or depreciation has nothing to do with the fundamentals of the underlying asset, and it has everything to do with things that are outside my scope of control? Like, imagine this. Imagine if you were in Syria, you run absolutely the best restaurant ever in Damascus, and then all of a sudden the war breaks out. No matter how good your management is, how much profit you're making, because of a macro event, you're wiped out. And that's what crypto effectively has done for a long time. And it's deeply frustrating. And people keep saying, oh, we don't need regulation. But I do see the same agency failures occur again and again. Exchanges doing very counterproductive things, stable coins without a full fiat backing, all these things. And it just makes me sick.
I have an idea. Let's remove the token price. Let's remove the trading. Let's remove the token price. I want to try and get a feel for the man that is Charles Hoskinson, the genius. When he looks at this space, who does he look at and say, wow, you guys are actually building something really interesting? I'm not sure if it's going to work.
I'll answer that question. That's a fair question. And there's a lot of projects that I admire. In some cases, the admiration is one way. It's not reciprocated. I really do admire the ambition Vitalik has for F2. I think he's crazy to boil the ocean to do as much as he's trying to do, but they have made reasonable progress, and I applaud when you try to do crazy things. I admire a lot Tezos. I think their governance push has been a really cool thing. I think there's huge issues with certain parts of the project, but nonetheless, I really admire the ambition, and I admire what they've been able to accomplish and how they keep pushing forward. I also admire their work in formal verification. Matic Labs and the other guys, they've done great work with Mickelson and the verification of smart contracts. I admire what Grigori Roshu is doing with runtime verification and what he's been able to achieve with the KEVM, Yella, and Firefly. And he started a whole conversation about formal verifications of Ethereum smart contracts. And it's extended to Algorand now and to Tezos and to other projects above and beyond the work that we do with him. So I also admire Ergo a lot. I love Sigma protocols. And I think Alex Cherpanoy is one of the few people to actually tackle or try to tackle some long-lasting problems we have, like UTXO meltdown, for example, so that you reduce UTXO bloat. Also, non-outsourceable puzzles for proof of work. So you get rid of mining pools. Super hard. They exist for a reason, to mitigate variance. So, I really admire a lot of those projects. And I admire a lot of the privacy coins as well, because privacy is a fundamental human right. And it's kind of crazy to try to tackle that because you're trying to do everything, the whole vertical. And if you slip up in any part of the vertical, you lose privacy. So you might have perfect snark system, but your network stack is not designed properly. You leak information and you can de-anonymize people. So I admire, those types of things. The problem is there's no way to price that because that's contingent on factors that are just beyond the control of those projects. And they have a lot to do with luck and chance or macro regulatory events. Like if there was a pro-US Treasury Secretary, very pro-crypto, we will see $250,000 Bitcoin. For that reason alone. If there's a very anti-crypto Treasury Secretary, we will see $5,000 Bitcoin. All these projects can execute fabulously and build all this amazing technology, and that's just the reality that the industry lives in. So I take a very pessimistic view in that respect.
Charles, we are out of time. I think I could carry on talking to you for hours and hours and hours, but that just gives me an excuse to get you back in 2021. So first of all, thank you for all the amazing contributions that you make to the industry, that you've made to me as an individual, that you've made to our station. Whenever you come on our station, we go crazy, our views go crazy, and you bring more people to us. Have a great remainder of 2020, and we'll catch up again in 2021.
Sure. This has been a lot of fun, Ran. I always love coming on. Sorry to rain on your parade from time to time.
No, what I'm going to do is the next time that we meet, I'm actually going to give us an extra half an hour because I think that's pretty much what we need. We keep going over time and we keep talking and I keep having to cut you off and shorten your answers. But the reality is that I'm so involved in your answers that, but I'm also managing the clock. So Charles, Happy New Year, happy holidays. Thank you so much. And we'll catch up with you again in the new year. We're going to move on to the next segment of our show. And that is all about small cap hunting. And I've got a big surprise for our viewers. We're going to keep watching. Charles, thank you very, very much.
Cheers. Thank you so much.